After what turned out to be a brief dip below the IPO price, LVS begins a large-scale uptrend with a strong bullish continuation to begin 2007. After a minor delay, the double top range completes, and later presents firm resistance that is slowing down the aggressive recovery. Technically, the strong close back under 100 forms a wider and much less strict triple top reversal. Unsurprisingly, the rapid decline in mid-August and a lack of subsequent bearish spikes leads to a weak downtrend. When bullish volume builds up to new highs, there are favorable conditions for a bullish continuation into mid-September. As would be expected, the old lower 100s range presents a crucial long-term support in the event the triple top range completes. The lower 100s are indeed a strong support range, but this is no guarantee of a bullish reversal as seen in other examples, especially when a surge of selling accelerates the slide into 2008. Here is a case where a descending triangle underwent a tenuous completion due to bullish and volatile price action into May that prevented the immediate bearish continuation of the established downtrend. It could be said the pattern was invalidated during those few weeks, but it certainly didn't fail as the drop continued and the lower 70 range and the descending trend line were not conclusively surpassed. Naturally, the IPO price presents strong enough support to slow down the overwhelming downtrend. A double top is possible, but like with other charts, it is necessary to wait for conclusive bearish developments dropping under the lower boundary around the 18 level. Here is an excellent example of a failed double top that began presenting a slight incline which later became part of a valid ascending triangle. Similar to other examples, there are some compromises made with the uptrend line. It starts with the lower wick of the large candle in early May, but crosses near the real body of another long lower wick with the upswing starting July. That also has above normal volume. Since both upswings have higher volume, the real bodies of both upswings would theoretically be contacted, but in order to accommodate more swing points in a stable incline, these adjustments are made. As would be expected, the IPO price and the old lower 70s range are the sites of contentious trading due to their long-term impact on the chart. 2018 begins with the lower 70s range being the site of a failed descending triangle that is likely to be recontacted. This is because bullish spikes in early June are quickly being reversed by sudden increases in selling pressure. On closer inspection, the sudden shift is due to a double top at the 80 boundary that is more difficult to identify due to the volatile short-term trading within it and the misleading weeks of bullish spikes. August 2018 begins with a great demonstration of a failed double bottom, being the site of a major bearish continuation. Naturally, the lower 70s range retains great resistance potential in the following years, and the IPO price manages to halt a rapid decline into the next decade.